Good morning and welcome to Wealth Wednesdays. It's Sarah Harding and I'm here today with Anthony Landahl from Equilibria Finance. Good morning, Anthony.
Good morning, Sarah. How are you?
Good, great. So, Anthony, tell me a little bit about yourself and your business.
Yeah, as you said, I'm Anthony Landahl. I'm Managing Director and Finance Broker at Equilibria Finance. We provide residential and commercial mortgages and business and asset finance to the clients that we work with.
Sounds good. Sounds good. So, Anthony, tell me a little bit about how clients find and engage with you.
Yeah, most of our clients come through existing clients and also referrals through the businesses that we partner with. These will be advice practices, accounting practices, and other practices. We also have a website, LinkedIn, Facebook page. And look, another aspect of our engagement that's becoming more and more important is the use of technology when it's suitable to engage with our clients.
Yeah, I do. I receive your regular emails as well that you send out, which are very informative.
Yeah, we try and provide our clients with some information throughout the month that adds value to what they're trying to do with their goals and objectives.
That's great. That's great. So, so we obviously work with other professionals as well when it comes to helping your clients.
Sure. Yeah, look, more and more credit and finance is becoming a much more strategic part of an individual and family's overall wealth management strategy. So we now work more and more with accountants and advisors in actually building that wealth management plan, and at the end of that, providing them with the right finance that fits the specific profile and the plan that's been put in place. So we do work more and more with a lot of advisors and accountants around some broader strategy as part of their broader financial planning.
And I guess that's quite important at the moment. I remember reading the newspaper yesterday which said that property prices have dropped 40%, which is quite phenomenal. I think everyone was expecting that. There seems to be a lot of noise out there in the media at the moment as well in regards to the property market and the lending environment. Can you tell us a little bit more about what you're seeing?
Sure. Well, firstly, there was some talk that property prices may fall by 40%. So that's part of the media noise, as you've suggested. Look, there is a lot going on in the credit and finance environment. We saw yesterday the RBA put rates on hold due to the current economic conditions, and there's people predicting that will remain on hold for a while longer. There's providers, everyone would have read in the newspaper, the three of the big four, Westpac, ANZ, CBA, have all increased their rates out of cycle. So that's independent to any movement by the RBA. They're saying that that is in response to increased costs of funding, and the US Federal Reserve are also predicting their rates may rise again. So that may impact us again. An example of that is if you're with Westpac and you do nothing as either an owner-occupier or an investor on a variable rate, the increase would have an impact of about $43 a month. So that's a genuine cost of living pressure for families. And we're seeing a little bit of that across the board. In saying that, there's still some great opportunities out there to navigate the credit environment. We also are seeing, and I think you hinted at this, a tightening in the credit environment. We've had the Royal Commission, we've had the regulators come in, and there's a lot more forensics around understanding personal circumstances and situations. So we are genuinely seeing a tightening of the credit environment. And we're also seeing, as you said, a drop in dwelling values. But just to put that in perspective, New South Wales and Victoria have come off about 4 to 6% in terms of dwelling values, but nationally it's only a couple of percent. So the actual drop is not as dramatic as we've had in some media reports. But what we are seeing is some changes in behaviours. We're seeing less investor activity, or we're seeing investors move from the major cities to some of the regional centres. And we're also seeing first home buyers come back into the market, which is great because they're getting some of the opportunities through the fall in dwelling prices that they didn't get exposed to maybe over the last couple of years. That's a bit of a snapshot of what's happening. So there's a lot going on. There's still some great opportunities, but it's a lot about navigating the environment we're in at the moment.
Yeah. So you did highlight the fact that the credit environment is getting tougher. What are some tips, I guess, that you could give to someone looking to get a loan at the moment? So what are lenders looking for on the application process?
Yeah, sure. So there's a lot more. There's a lot more forensics, I guess, is one way of putting it. I suppose if I can look at 5 or 6 key things they're looking for, they're looking at people's credit histories, they're looking at income.
Can I ask a question about that?
Sure.
So credit history. So if somebody, let's for example say, has a phone bill
Yep.
and they're late by 2 weeks on a phone bill, is that going to come up in a credit history? Or is it more sort of like, I've had a credit card, I haven't paid it for 5 years, I've defaulted, the bank's chasing me and it's now gone to like a different department to, Like where do the boundaries of that? Because I'm interested.
Yeah,
in
things can come up on people's credit history that maybe shouldn't be there.
Yeah.
These can also get removed from people's credit history through the right avenues. So there are times where someone will find late repayments or an inquiry they made about a credit card a number of years ago that they never went ahead with. It might be on their credit history. The main thing is how these are approached. There are things that genuinely aren't a default or a negative that can be removed from a credit history. But I guess what I'm talking about in the context of the credit environment with the credit history is they're wanting to see, have you had unsecured funding? Have you got a lot of credit cards? Have you made a lot of credit inquiries that may get them to look twice at giving you credit in this type of environment? So there's a lot more caution around credit history. They want to see guaranteed income streams, whether you're PAYG or self-employed.
Okay, yep.
They want to understand your living expenses. What are your costs of living?
Another question.
As well as discretionary costs of living.
So if you're self-employed,
Yep.
how long do you technically need to be self-employed before the bank is going to look at your application? So if just for example, I've started a business, I'm 6 to 7 months in, I'm going really well, is the bank still going to look at me as a good applicant?
Good question. Broad brush of that is banks will generally want 2 years ABN, and most banks will want 2 years of financials. That's profit and loss and balance sheet. There are some providers that will assist clients with 12 months of financials, and then there's some other providers who will accept 12 months ABN and 12 months financials. However, you're starting to pay a slightly higher interest rate because it's perceived risk in terms of the longevity of the business. So if we start, fundamentally they're looking at 2 years ABN, 2 years financials. You can then, some providers will accept 1 year's financials with 2 years ABN.
Yep.
And then you've got your other providers that are more, they call themselves non-conforming in that sense. They will accept that you can bring it back from that in terms of longevity of ABN and financials, but your interest rate is risk rated, and what that means is you'll pay a higher interest rate.
Okay, makes a lot of sense. Yep.
Other things they're looking for: genuine savings. Have you got surplus income? They're looking at what other liabilities do you have: personal loans, credit card debt, and fundamentally they're looking for stability. So if I summarise that, they're looking for stability around income, expenses and budgeting. Are you managing your cost of living? Liabilities, what other debt have you got, and other assets in your situation.
Okay, makes sense. So you've got to get on top of all of that stuff. What are you finding are your clients' biggest challenges as well at the moment when it comes to getting finance?
Yeah, what we're finding in the market, there's a lot of uncertainty and confusion, particularly with first home buyers who might be entering the market for the first time. Understanding the process and what's involved. A lot of what we do is educate and guide our clients. We're finding with investors that they may not have the same equity that they had a little bit while ago to keep building that wealth management portfolio, so valuations are coming into play a lot more.
Yep.
We're also finding things like actually just obtaining the finance. People are getting impacted by more scrutiny and regulation around different aspects to the credit environment, so they may not actually obtain the amount of finance that they thought they would or that they may have obtained a couple of years ago. So a lot of the challenges are relating to navigating the current lending environment. We're also seeing other challenges which are common, I guess, first home buyers building a deposit, building their savings. So at times we might help someone build a budget so they understand in 6 months' time what they're able to do. So there's a lot of different challenges depending on the objectives, but a lot of it is at the moment the changing credit environment, the changing policies that are coming in, and staying across all that for our clients.
Are you seeing the same thing play out in the business finance space for business lending and for business growth?
Yeah, so business finance is a different space to consumer finance. So consumer finance falls in under what's called the NCCP, which is the National Consumer Credit Protection Act. Business finance isn't under the same regulations. So the main challenges we're finding with business finance are fairly similar to what we've traditionally seen around cash flow, financing their growth, around expansion projects, whether it's buying a premises, whether it's buying plant and equipment, whether it's restructuring their asset finance. So the challenges of small businesses are there. We're finding small business, there's a lot of things that come in at times that seem to make it harder for small business to run a small business. So we're seeing some challenges around that, but the finance needs are generally similar to what they've always been. I guess the challenge, what we're seeing is there's more players coming into that space. It's a more competitive marketplace to a certain extent, and there's some more, sophistication and opportunities around some of the ways that small businesses can structure the finance needs.
That's good. And I guess lastly, what's one piece of advice you'd give to a potential client?
Yeah, so in terms of clients looking at buying a home, building an investment portfolio, I guess it's just understanding that credit can still be obtained. There's still great opportunities out there with providers. We've got a panel of 25 providers we can draw on, for example. Not all of them have increased their interest rates. Not all of them are pricing out of the market for investors, for example. But I guess the piece of advice is be prepared, get organised. If you're self-employed, make sure your financials are in order. If you're a family, make sure you understand your budget. Make sure you understand your cost of living, and I suppose get organised with what your broker's going to require to put the application in place. Get a pre-approval, which means you understand your capacity, what you're able to purchase. It's been through credit. You're able to then go with some comfort and buy your home. So get organised, give yourself a little bit more time than maybe you thought you needed, and provide all the information up front to your broker, who can then package up the application and navigate that through credit for you.
And that's one reason I particularly enjoy working with you, Anthony, is that you've got a very strong focus on the strategic element of why a client would even be buying a property or obtaining business finance. Whereas, I have worked with brokers in the past that just don't give it enough thought. And, when it comes to a client situation, you just, you need to be looking at not just now or the past, you also need to be looking at the future. So thank you so much, Anthony, for coming this morning and allowing us to interview you. So I hope everyone's really enjoyed that. And until next month, see you later.
See you later.